Welcome to the Monthly Reporting Compliance Training video, presented by the Employer Reporting, Compliance, and Education Division. This presentation is for new reporting officials of state agencies under the Department of Personnel and new reporting officials for the county clerk and sheriff's offices whose payroll is through the state treasury. All systems under KPPA are qualified governmental defined benefits plans established under Section 104A of the Internal Revenue Code. The three retirement systems are governed by the Kentucky Revised Statutes under Chapters 16, 61, and 78, respectively. Since KPPA is an administrative agency, the administrative regulations necessary to carry out the statutes, policies, and procedures covering the systems are found in Title 105 of the Kentucky Administrative Regulations. What this means is the who, what, and how of the monthly report is governed by statute and administrative regs, and ERCE is there to help participating employers stay in compliance. Most compliance-related issues occur within the member details portion of the monthly report. Each member detail submitted to KPPA on the CRIS file contains over 50 fields of personnel and payroll data that KPPA uses to build and maintain the member's retirement account. This is an example of the member details as KPPA sees it once they are posted to the member's account. Let's review each section and talk about the compliance of the requested data. The personal information section starts the member details off and requires the usual information such as the member's name and social security number. Make sure the name provided matches their social security card and do not use a nickname in place of the given name. Also, when first entering the employee into your payroll system, please verify the social security number matches the member's social security card. An incorrect social security number can create an erroneous retirement account for the member, which is fixable, but is always better to double check and avoid this possibility. The final data field in this section is the KPPA member ID, and as a new reporting official, you may have no idea what this is. The KPPA member ID is a unique 5- or 6-digit identification code specific to each member reported to KPPA. While we must have your employee's social security number for taxation purposes, the member ID is the identifier we use to create the member's account, to identify the member when discussing questions or issues with the employer, or to request personnel and payroll information for retirement purposes. To see if the member is already set up with a member ID before adding them into your system, open the Employer Self-Service website and click on the Services tab. The modules under this tab were created to assist the reporting official with finding or completing information easily. One of the modules available to you on this tab is the Download Member ID module. To search by an individual employee, select the Social Security number choice in the drop-down list of search options. If the member already has a member ID, the search will retrieve a screen like the one shown here. In the box at the bottom of the screen, the first section contains the KPPA member ID, the member's name, and last 4 digits on the social. Also provided is the member's contribution group and participation date. The contribution group is a required field in the next section of the member details for the employee, so it is important to note what group the member participates in. If you click the Show button and the screen refreshes to display the red message at the top, please review the Social Security number entered and verify it is accurate. If it is, the notice at the top of the screen is informing you that this Social Security number has never participated in any system under KPPA, so a member ID is not available, and the employee should be set up with a cash balance contribution group. The next section in the member details is the contribution information section. This section contains some of the who, how, and what that needs to be reported to KPPA based on statutory law and administrative regulations. The required fields in this section are the salary field, the payment reason field, and the contribution group field. We briefly reviewed contribution groups, or more specifically where to find them, when discussing the Download Member ID module in ESS. But let's review what the contribution group is and how it affects your employee. The contribution group defines 2 things. First, the amount of employee and employer contributions submitted to KPPA, and second, what benefit level the employee is eligible for at retirement. There are 3 parts to the contribution group label as we see it at KPPA. The first part tells which retirement system your agency and the employee participates in and is automatically added to the label in the details. KERS indicates the employee and employer is under the state retirement plan. SPRS show that the employee is an officer of the Kentucky State Police. And CERS covers the employees of the county clerks and sheriff's offices. The second retirement section advises whether the employee is employed in a non-hazardous or hazardous duty retirement plan. And the reporting official does drive this selection based on the position title the employee is reported under. If the employee is under the hazardous duty coverage, the position they are working in has been approved by the KPPA Board as hazardous, and they and their employer pay a larger contribution rate for the hazardous benefits. The final piece of information on the label is the group the employee participates in, which the reporting official must select in CRIS or their specific payroll system. There are 5 possible contribution groups your employee could qualify for, and each group defines how much the employee contributes from their paycheck and what benefit tier they qualify for. The first 3 are for employees who have not retired under KPPA previously and who will be employed at your agency in a regular full-time position as defined in statute. And the initial date of a regular full-time position in any state-administered retirement plan determines which of the 3 will be your employee's contribution group. If the employee is a KPPA retiree returning to a regular full-time position as defined in statute, then the contribution group for this employee is retired reemployed. The final contribution group is non-participating, and members in this contribution group are working in positions defined as non-participating specifically in statute. We will review both the participating and non-participating position status under the next section. In statute, reportable salary is called credible compensation and is made up of salary, wages, tips, and fees includable on the employee's federal Form W-2 wage and tax statement under the heading Wages, Tips, and Other Compensation. But reportable earnings are not just limited to regular wages. Reportable wages also include lump sum payment for compensatory time for Tier 1 employees, bonus payments, severance payments, settlement agreements, and qualified transportation fringe. However, before reporting a bonus payment, severance payment, or settlement agreement to KPPA for the first time, please contact the ERCE division for assistance. These payments need to be reviewed before being reported to determine how they are applied to the member's account for compliance purposes. KPPA requires the employer to identify the type of credible compensation they report on the employee in the payment reason field. Regular wage payment reasons are all just a variation of the employee's regular paycheck. So for instance, if the employee works overtime, then use the payment reason of regular pay with additional credible compensation. Leave without pay should be used for every month the employee is receiving less than normal amount of wages, including months with $0. The additional wages outside of the regular pay need to be specifically identified for compliance and dispensation purposes. Those additional wage payment reasons are listed in a separate column to remind you that if your employee is receiving one of these payments, it needs to be identified and reported on a separate record from their regular wage payment. We have covered what payments should be reported to KPPA. Now let's discuss the payments which, according to statute, should not be reported to KPPA. Those payments include lump sum payments for accrued annual or vacation time, lump sum payments for accrued sick leave if the agency does not participate in the alternate sick leave program, training incentive payments for elected city officers, living allowance or expense reimbursements, lump sum compensatory time payment for Tier 2 and 3 employees, and nominal fees paid to a volunteer. Regarding the payment of annual vacation and sick leave, if the employee takes vacation time or sick time in place of a workday, that does need to be reported as salary. It is the lump sum payouts of this accrued time that fall under the non-reportable category, regardless whether the payout is during the year or at the time of termination. If any of these payments have been reported to KPPA in the past, please contact your ERCE representative or the employer hotline for assistance. The Employment Information section follows the contribution information on our member detail record and brings with it more details regarding the position and pay. The required fields in this section are the position status, job position, employment begin date, payroll frequency, type of rate of pay, and scheduled hours per day. The position status affects many aspects of the member's retirement account and helps KPPA maintain the accuracy in reporting. The first thing it determines is whether the employee is a participating or non-participating member of KPPA. Statute and the administrative regulations determine the positions that fall into the participating and non-participating groups. To be eligible to participate, the employee must work an average of 100 hours per month over a fiscal or calendar year. An employee could be in a regular full-time, part-time, or intermittent position and qualify as participating based on the statutory definition of the term. Most participating employees contribute employee contributions and service credit to a retirement account, allowing them to retire and draw benefits when eligible. The exception to that are re-employed retirees, and more information on this type of personnel is available in the next training video. The positions in non-participating status start off with that of part-time and intermittent. These positions can be non-participating if the employee does not work an average of 100 hours per month over the fiscal or calendar year, which can be confusing. For assistance with your part-time and intermittent employees, you may contact your ERCE representative. Other non-participating positions defined in statute are seasonal, temporary, emergency, probationary, and interim. These positions remain non-participating as long as the employee does not work over the statutory maximum number of months. Something to note, at KPPA, it does not matter when the position begins or ends within a month for it to be counted as a month of service. So make sure you count by month and not by dates. A non-participating member would have a retirement account created, but the employee would not contribute nor build retirement credit in that account. The last category in the position status is that of independent contractors. Before assuming the independent contractor or an employee through a staffing service does not participate, please contact your ERCE representative. The position title is another piece of information used by KPPA to maintain the accuracy of the employee's retirement account. Most employees will be reported with the position title of Other. However, there are exceptions to this generalization. If your agency employs any of the listed job positions, make sure to identify the appropriate personnel with these titles. If the employer has been granted approval to participate in the Hazardous Duty Coverage Plan, the approved hazardous job position titles will be available for all employees working in those positions. If your employer is interested in learning about hazardous duty coverage and the process to petition the KPPA board, you can view the hazardous petition process video on the employer page of the KPPA general website and reach out to your ERCE representative for more information. The employment dates provided on an employee record reflect not only when the employee was hired or terminated, but can also reflect changes in the member's account during their career. KPPA requires an employment begin date be reported when the employee is hired or rehired to your employer. An employment end date and end reason must be submitted when the employee leaves a position with the agency due to termination, retirement, or death. When reporting an end date, always remember the end date must match the posting month it is reported in. So if the employee terminated April 30th, then instead of posting the wages paid after termination to the May posting month, the agency would have to add the wages and end date to the April record through the adjustment process. In addition to these fields being used for the employee's hire date or termination date, if an employee changes position status, contribution group, or position title for hazardous duty employees, an end date and reason needs to be reported on the original record, and a new record with an updated begin date needs to be provided for the new status, group, or title. This allows KPPA to keep record of movement within the employee's career and helps us to maintain the compliance in the employee's account. The remaining fields in the Employment Information section is for data used at the end of the year to average the employee's service to determine if they meet the 100-hour average requirement for participation in KPPA. Every employee is run through an averaging process, so the upkeep to these fields is essential throughout the year. The type of rate of pay advises KPPA how the rate of pay is being reported in the member details. The rate of pay is the hourly, monthly, or yearly amount that the employee's credible compensation and additional wages are based on. Employers should report scheduled hours per day on all employees, unless they are being reported in the intermittent position status. The leave balance section provides information on the accrued sick leave and compensatory leave for employees of agencies who participate in the leave programs. These fields are automatically populated for the state agencies and state police. For the county clerk and sheriff agencies who participate in the leave programs, the reporting official must add this information on the supplemental report detail when the employee terminates. Accrued leave at the employee's termination may provide an increase to their monthly retirement payment. The state and state police agencies are required by Kentucky Revised Statute 61.570 to participate under the standard sick leave program. County clerks and sheriff offices who elect to participate in the sick leave program have the option of participating in either the standard or the alternate sick leave program. And once they have elected to participate, they can never opt out of participation. If a participating employer submits a member detail record with an employment end reason of termination, death, or retirement, the total sick leave balance is required, even if the total hours or days accrued equals 0. If the employer provides compensatory time payments to their employees, the lump sum payment should be reported for Tier 1 employees only and separate from the regular pay record. This automatically populates for the state and state police agencies, but must be added to the supplemental report details by the county employers who provide this benefit. The final section on the member details is for the employee's demographic information. This section provides information on the date of birth, gender, and address for the employee. Most compliance issues in this section have to do with the employee's address. The address provided on each employee is reviewed for validation by a service provided by the State Commonwealth Office of Technology. If the employer would like to report the standardized USPS address to their employee records, please use the USPS.com website to find that information. It is also important that if the employee has a P.O. box, that is provided to KPPA, as we need the mailing address on the employee, not their physical location. As you can see in the example, it is sometimes difficult to guess what a correct address will be, so we strongly encourage using the USPS standardized address and verifying mailing address versus location address with the employee if possible. The information we have provided in this training was for the new reporting official to get a quick overview of the compliance in the monthly report. The employer section of the KPPA general website contains many references for more in-depth information on reporting or other compliance questions. We have a quick link to the employer reporting manual on the overview page, as well as other topics of news and information that impacts our participating employers. In the navigation menu on the left, there are many pages available to assist an employer remain in compliance. For example, the Publications and Form page houses numerous publications, quick guides, and newsletters, and the training page contains short informational videos on a variety of topics available anytime for viewing. As always, we encourage the reporting official to reach out to their ERCE representative by phone or by email for assistance with reporting and compliance-related questions or issues. Your ERCE representative is available to assist you Monday through Friday from 8 a.m. to 4:30 p.m. Eastern Standard Time. Thank you for viewing the new Reporting Official Monthly Reporting Compliance Training video. We hope you enjoyed this training and will continue with the final video in this new Reporting Official series, Retirees Returning to Employment. If you have any questions regarding this training, please contact your ERCE representative for assistance.